We're a country where here again, $8.9 trillion in government debt, or 25% of all the outstanding debt that's on balance sheet anyway, pretty damn close to it, has to be refinanced at much higher rates over the next 12 months. When you see countries like China selling treasuries and buying gold, things are changing. And I think gold is being remonetized in the world's view. Maybe this is why it was reclassified tier one. Certainly, there's been a lot of talk, and certainly you and I have talked about it a lot, and you hear Vince talking about, a lot of people talking about that gold, because it carries no counterparty risk, because it's outperformed the bond market, is being looked at as a substitute to the bond market. I believe that. I think the world is looking at gold a little bit differently now than it has been perceived for quite some time.
The unexpected resurgence of a strong dollar in 2024 has caught many investors off guard, prompting a reevaluation of their earlier predictions for the currency's decline. This shift has been driven by a robust U.S. economy and persistent inflation pressures, which have deterred the Federal Reserve from implementing interest rate cuts as initially anticipated. AndySchectman, CEO of Miles Franklin, expresses concerns about the dollar's strength, especially considering the United States' significant debt and unfunded liabilities. Despite record debt accumulation and fiscal challenges, the dollar's current strength appears unjustified to many observers. Furthermore, the United States' imposition of sanctions on developing countries has prompted them to seek alternatives to the dollar, leading to a growing movement away from dollar dependence. In response, BRICS nations are increasing their efforts to reduce their reliance on the dollar. Given their substantial commodity holdings, they are even exploring the possibility of launching a stablecoin backed by gold. Schectman emphasizes the growing importance of gold on the global stage, particularly as countries like China shift their reserves away from U.S. treasuries and toward gold as a hedge against counterparty risk, especially in light of increasing scrutiny on the bond market. The development of a stablecoin by BRICS could not only bolster member nations' economies, but also pave the way for creating a native currency for the bloc, further reducing dependence on external currencies like the dollar. Come along as we explore AndySchectman's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Trump doesn't win, you'll see Lael Brainerd as the head of the Fed, who is a modern monetary theorist, who helped develop the CBDC with MIT, who ran point for FedNow. And on the other end, you have Judy Shelton, who is the opposite end of the spectrum. She wants to bring back a gold standard. And certainly, I think that regardless of how this all plays out, in order for a system to have any credibility moving forward, it needs to have some sort of a peg. And we've talked about this before. Even Kristalina Georgieva, the head of the IMF, said a CBDC that is not pegged to something is fiat. And I keep going back to gold being the only other tier one reserve asset, as mentioned by the Bank of International Settlements. I keep looking at all the gold that not only has been purchased by all the central banks, but also repatriated. And interestingly enough, even through a Freedom of Information Act, we're not finding out how much gold has left the Fed, who's been bringing it home, and why don't they want to tell us. So, yeah, I mean, and if you look at the strength of the dollar, it's crippling a lot of countries right now. The strength of the dollar, it's very unusual. Even though the people in this country have seen their purchasing power get clobbered through inflation, the strength of the dollar around the world is outpacing much of that inflation, and it's making it very, very hard for a lot of these countries to purchase commodities that are valued in dollars. And a lot of people think it's because of all the dollar-denominated debt creating the demand for dollars to pay back the debt, and maybe that's the case. This is a short-term strength of the dollar as far as I am concerned, and I can tell you that much of the world would really like a dollar that isn't as strong as it is right now. And George Gammon did a very interesting podcast on this very topic recently, talking about how many countries are really struggling under the strength of a dollar, and that strength is completely and totally unjustified as far as I'm concerned. I mean, how can it be justified when we are witnessing record debt accumulation, $1 trillion every 3 months, where we're a country that it's 175 trillion in the hole. And I was looking at something the other day, 77 trillion underfunded in Social Security, Medicare Part B being the largest liability, underfunded by 99.5 trillion. Your Medicare D, which is for prescription drugs, missing 22.1 trillion. And, we're a country where here again, $8.9 trillion in government debt, or 25% of all the outstanding debt that's on balance sheet anyway, pretty damn close to it, has to be refinanced at much higher rates over the next 12 months. And, when you see countries like China selling treasuries and buying gold, things are changing. And I think gold is being remonetized in the world's view. And maybe this is why it was reclassified tier one. Certainly, there's been a lot of talk, and certainly you and I have talked about it a lot, that, and you hear Vince talking about, a lot of people talking about that gold, because it carries no counterparty risk, because it's outperformed the bond market, is being looked at as a substitute to the bond market. I believe that. I really do believe that. And so I think the world is looking at gold a little bit differently now than it has been perceived for quite some time. And will have a very pivotal role moving forward. And certainly if Judy Shelton gets in behind Trump and is the head of the Fed, and they move in that direction, it is a massive step in the right direction to gain credibility.
The U.S. budget deficit has reached staggering levels, widening to $1.7 trillion in fiscal year 2023, and is projected to soar to $2.6 trillion by 2034, according to the Congressional Budget Office. Concurrently, U.S. government debt held by the public is on track to hit a record 106% of gross domestic product in 2028, a significant increase from 97% in fiscal year 2023. This surge in debt has been remarkable, skyrocketing from $17 trillion in early 2020 to $27 trillion, and from $5 trillion in 2007. AndySchectman draws attention to the alarming levels of debt in the U.S., which encompass various forms, including credit card debt, household debt, and underfunded liabilities in essential programs like Medicare, Medicaid, and Social Security. The substantial interest payments alone underscore the economic strain caused by this debt burden. Furthermore, China has been steadily reducing its holdings of U.S. debt over the years, with its treasury holdings declining from approximately $1.1 trillion in 2021. Chinese investment in U.S. debt hit a 14-year low in October. Schectman raises concerns about the sustainability of U.S. debt financing, particularly as China continues to divest itself of U.S. treasuries. Questions arise regarding who will absorb the substantial volume of bonds that need to be sold in the foreseeable future, underscoring uncertainties about the long-term viability of U.S. debt management. Let's get back to the interview.
1.1 trillion in credit card debt, 17.3 trillion in household debt, and all of the stuff we talked about in underfunding in Medicare and Medicaid and Social Security, where we've already paid almost 525 billion in interest payments alone this year. And a system where China is selling treasuries, and the U.S. government is supposedly doing the same thing also as they normalize their balance sheet. So, who's going to buy the 10 trillion in bonds in 2024 that need to be purchased? And, what's really crazy about that is that if you talk about, as you mentioned, the 2025 balance sheet proposal budget, where all of that debt, you're talking almost $11 trillion a year in bonds that need to be sold through 2030. Who's going to buy it if China's not and the Fed's not? Who's going to buy them? It becomes very, very compelling. One of the things that Jim Willey said on your show that I thought was very interesting and makes a hell of a lot of sense is that the U.S. is paying money under the table to Great Britain, to be the number 2 largest holder of treasuries. And just like, we believe that Ireland and the Cayman Islands are filling these roles, we're witnessing the beginnings of monetization of assets, monetization of debt that leads to hyperinflation. And, if you read this deal and think about it for a moment, you couldn't draw it up any better. That's exactly what they were talking about. Let all these people in, overwhelm the big cities, have massive entitlement programs, and create a whole legion of voters that will never vote to have that meal ticket taken from them. It's diabolical. It's scary as hell. And I urge everyone to Google and read the Cloward-Piven strategy. It'll blow your mind, as it did mine. we're borrowing money just to pay the interest on our debt. And yet we feel that we should borrow more money and give it to these countries only to piss off their foes more and more and more and make the rest of the world see, oh, okay, they'll either sanction you or give you money that they borrow. They're a paper tiger. They're broke. They're insolvent. The more you see this stuff, the more you scratch your head. I can't believe some of the things I see, and in particular, the actions by our leaders and the joy of giving away our money and indebting our children and grandchildren forever is just beyond me. So, maybe they'll pull out that Treasury clause that or the Federal Reserve clause that allows them to remonetize the price of gold, and this will all go away. Until then, we are a country that's literally lost its mind from within by allowing this stuff to happen. And instead of fixing our infrastructure and getting our borders in order, we give it to a war. We've given $200 billion to these people, and there's no congressional oversight. We don't even know where it's gone, who's spending it. And now they're giving missiles and all this kind of stuff. It's insanity to me. So I think it's worth mentioning, when people look at this and say, how can this be happening? You have to ask yourself, conspiracy or reality? Is it too stupid to be stupid? Could it be intended? Is this what they're trying to do? If not, we need a change in Washington very, very, very badly and very quickly.
The ballooning U.S. government debt and rising interest rate payments surpassing defense spending have fueled increased demand for gold. Investors view these assets as hedges against inflation and the U.S. dollar's purchasing power depreciation. Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.